If, as we walked out of here today, I said I would like to buy 10% of your financial future, I was going to write you a check today, and from this day forth, you were going to give me 10% of everything you earned. How much would you want to charge me for that? I'm going to buy 1/10 of you. Well, I think if you thought about that a little while, you should contemplate that for a few minutes. You know, you're going to get a check from me today, and you can do anything you want with the money, but from this day forth, you have to give me 10% of what you earn. I think it would be very foolish of you, any of you, if you asked for less than, say, $50,000. Your potential is worth a minimum on a 100% basis of $500,000. That is the big financial asset you've got. It's way more important what you do with that $500,000 asset that you own today than whether you decide to buy stocks or bonds, or whether you put your money in a mutual fund or pick your own stocks or anything of that sort. The biggest financial asset that you have going for you by miles is the value of your own earning power over the years. So that's really what you should focus on. If you're focusing on your financial future, that means you should focus on you. Because whether your 10% is worth $50,000 or $100,000 or $300,000, which would be $500,000 or $1 million or $3 million for all of you, whether it turns out to be one or the other is really dependent in a very large part on what you do in the next few years. If you've got a 200 horsepower motor, you get 200 horsepower out of it, you get your full potential, or do you get 100 horsepower or 50 horsepower? Now there's two things that can hold you back in getting the full horsepower out of your engine, whatever it may be. All of you have big enough engines. And one of those is a lack of education, but that probably isn't going to happen to very many people. If you did have a lack of education, if you didn't have a chance to get a decent education in life, it wouldn't make any difference what that potential was, because you'd never unlock it. But the second most important thing, and equally as important, is in terms of the habits that you develop, in terms of what you do with yourself. You can't change your IQ or how far you can throw a football or how high you can jump or the color of your hair very easily, but you can elect to have integrity that matches anybody else's. And if you match that with intelligence, which you have, and energy, which you have, you will get an extraordinary result. I'll give you a little simple test to apply in terms of thinking about the kind of habits you want to develop, because you can have any habits you want to have. You can be lazy, you can be prompt, you can be late, you can be honest, you can cut corners. I mean, you have all these choices, and those are choices for you to make. Nobody else is going to make them for you. And I would suggest that you play this little game with me too. Think about the person you would most like to be in life. So maybe it's one of your contemporaries, maybe it's somebody a little older, but pick out the person you admire the most, the person that you'd change places with if you could. And then write down why you admire them. Just put it on a piece of paper. And then figure out the person that you would least like to change places with, who really turns you off, who do you find repulsive. And list the reasons why that person turns you off so much, and put those down on the other side of the paper. And then look at that list. And you'll find that everything on the left-hand side, what you admire in other people, the qualities they bring to life, cheerfulness, generosity, all kinds of things, you'll find those are things you can do yourself. It's very simple. You got to apply yourself, but the habits you form in doing that early on will carry you through life. And on the other hand, you'll find that the things that make people repulsive, selfishness, obnoxiousness, all these things, egotism, are things that no one has to have. If you find those in yourself, you can get rid of them as long as you get rid of them early. Now, I'll give you one other small piece of advice that's just a corollary on this. And that is, as a general matter, as a one piece of specific financial advice, I would say, avoid credit cards. Just forget them. We're in various businesses that issue credit cards. The public loves credit cards. But if you start revolving debt on credit cards, you're going to be paying 20%. And you can't make progress in your financial life going around borrowing money at 18 or 20%. You can make a lot of money by lending it out at 18 or 20% over time. If you can find anybody that's good that will borrow from you. But you don't want to be on the side of the equation that's always behind in life. You want to figure out where you don't want to be ahead of time and avoid that. They run up bills they can't pay, and really only society can solve that one in terms of protecting people against that. That's just plain bad luck. But the other one is from people who run up credit card debt, and they're facing bankruptcy, or they've been through bankruptcy once before, and they owe a whole bunch of money, and they can't even pay the interest, let alone pay any principal. And half of my letters come from people like that, and that problem is avoidable. Catastrophic illness is not, but credit card debt is something you bring on yourself, and it's way better, it's way easier to stay out of trouble than to get out of trouble financially. And I will guarantee you, if you run up big credit card debts, you will be in trouble the rest of your life in terms of your financial situation. On the other hand, if you get ahead of the game, even if it's on a very modest scale, so that money is coming in from investing, and people owe you money, or equities owe you ownership, you'll be way ahead of the game compared to paying your creditors every month. So my advice to you is, if you can't pay for it, don't buy it, and get yourself in a position where you can pay for anything. We'll be glad to say that they've loved what they've done all their life and feel it was very worthwhile, but they're terribly sad they made that choice because they didn't make a lot of money. I don't think anybody's ever said that to me, that they wish they'd gone into something else where they were uncomfortable doing it, or didn't enjoy it, didn't feel very productive, but made a lot of money. So I don't think you'll find that. So I would go to work in whatever turns you on. It may turn out that it'll be more profitable than you can think, but almost everybody here will make enough money, unless they get some terrible habits along the way. I mean, it's not necessary to have huge amounts of money in order to enjoy yourself. Great wealth is the tiniest bit different in a real sense than having just a decent income. To trade a decent income and something you love doing, and something where you feel worthwhile doing it, for huge wealth where you trade off a lot of your principles, would be a terrible mistake. Oh, well, it's not very complicated. It goes back to getting full use out of your own talents first. I mean, the difference between whether you're going to be earning X or 2X or 3X a year 20 years from now is going to be a function of how well, not how much talent you have, but how well you use the talent you already have. And so that is your best financial future is your own ability and your capacity to use those abilities to their potential. And that can't be taken away from you. They can't even tax it. I mean, most things, if you own a piece of real estate, if they double the taxes, they double the taxes, and that changes your ownership in the property, because now, in effect, the taxing authorities own more of it because they've got a greater command on the revenue stream. The same thing about almost any asset you have, but they don't tax what's in your head, and they don't tax your ability to start performing when you get to work in the morning and finish in the evening to your potential. One of the things that amazes me is how people who really do perform well just sort of jump out at you once you're running a business. And they say in stocks that you should buy stock in a business that's so good that even an idiot can run it, because sooner or later one will. And that's not terrible advice. And a lot of people who focused on those problems at the time have missed the bigger picture. And the bigger picture is that every generation goes better than the one before it. And that's because of savings, because savings enable people to create new tools to do better things as they go along. And it's also due to an environment that lets people realize their potential to a greater degree than most other environments in the world. I like to find businesses that have good economics. Now, what are good economics? Well, good economics are a business that has some kind of a moat around it that makes its product or its service or its location or something a little more desirable to the customer than any other sort of comparable product. The number one candy bar in the last 30 or 40 years has been Snickers. People don't fool around with different candy bars. They fool around with different length dresses. They fool around, with all kinds of things, but they don't fool around with candy bars because they figure, they're going to go in and lay out 50 cents or whatever it is and put it in their mouth. And they're not going to, for 50 cents and putting it in your mouth, you're not going to say, I'll lay out 45 cents and put something else in my mouth. So You find that very stable. And we like businesses that we think we can figure out where they're going to be in 10 or 15 years. I know where Snickers bars are going to be in 10 or 15 years. They're going to be selling just about this, the way they do. It's predictability regarding the sustainability of a competitive advantage, something special about a product. So we look for those kind of products. And then we look for people that are running the business that are honest and able. It's easier to find people that are honest and able than it is to find businesses that are going to stay wonderful for a long period of time. There are a lot of businesses that looked like they were going to stay wonderful that really evaporated over time. But that's what we're looking for. And the nice thing about it is we don't have to find very many. We find one a year. That's terrific. Because you don't need 100 or 1,000 great investment ideas to do well. You need a couple. And the discipline is the most important thing. We don't need brain power. We need discipline. And, you don't need 150 IQ to do what I do. Thank God. You don't need 140. You don't need 135. You may need 115 or something like that. But you do need discipline. You have to wait until you see the fat pitch to swing at. Because investing is a no-called strike game. If you don't like those prices, you don't have to swing. You can wait there day after day after day after day, and there are no called strikes. Now, when you swing, when you decide to buy something, then, if you swing and miss, it's a strike. But it's a marvelous game to be in because there are no called strikes, and you can simply wait for that one time in a month or 6 months or a year or 2 or 3 years when you really know what you're doing, where you like the price, where you like the people running the business, and then you swing, and you only need a few swings in your lifetime. And if I'm only able to evaluate 5% of the businesses in the world, no problem. I just stay within that 5% and try and find something. And most people get in trouble in investments because they get itchy. They can't discipline themselves, and they hear about other people making money. Nothing upsets people so much as to hear about their friends making money. I mean, that's very destructive to discipline because they think, I'm smarter than that guy next door, and he just bought that new car with the money he made trading stocks on the internet, so why can't I? Well, the answer is you can't over time. You will lose money to trade stocks actively. And it's hard to exercise the discipline. But anytime you buy something, you should be able to take out a one-page sheet of paper and say, I'm buying General Motors at 65. I'm buying General Electric at 150 because. And you should write down the reasons. You can't fill out the sheet. If it's because somebody told me about it at a cocktail party last night, that's not good enough. If it's because my broker told me about it, that's not good enough. You've got to have a reason for thinking that it makes an intelligent investment. You do the same thing if you're buying a farm or an apartment house. If you're buying a farm, you can say, I'm buying this farm at $1,000 an acre because I think I can earn $60 an acre on it. If corn sells at such and such, and soybean sells at such, and yield is such and such, then you figure it out. That's the same reason you buy businesses. And when you buy stocks, you're buying a little piece of the business. And that's probably the most important thing to remember in investing is that when you are buying a stock, you're buying a little piece of the business. And if you are buying it at an attractive price for the business, for the whole business, you're going to make money. And if you aren't, over time, you won't make money. Yeah, I can't tell you whether or not to buy stocks now generally. I think it's important that you save money, and whether you put it in the stock market or not, I don't think is terribly important. I think if you're interested in stocks, you should buy it. And you've got a little capital, you should buy a few. I mean, I don't think there's any way of learning about them better than experiencing. Doing it on paper isn't the same. I can guarantee you, if you lose money on paper or lose real money, it's a different experience. And I think you'll learn more about yourself if you do it that way. I would encourage you, if you're interested in the field, to do a few things. I'd still try and make them as intelligent as possible. I would try to stick with businesses I thought I understood. I'd still get out that sheet of paper and I'd write, I'm doing this because, and just test my reasoning. Then I go back and read it a year later and see whether what you thought would be true turned out to be true. And business people don't like to do postmortems, building plants or buying companies, and they never want 2 years later to run a check on how that decision turned out. It can be unpleasant, but you learn from postmortems. And you don't want to learn, it's way better to learn from other people's mistakes than your own, but you got to learn from a few of your own too. The time to do it is when you're young.